Well, hey there, freaks. It's your boy Marty Bent here to introduce you to this week's sponsor. Very glad to have these guys on board. I'd like to introduce you freaks to BlockFi. No one likes having to sell their crypto if they don't want to. It's the last thing anybody wants to do, especially if you're a hodler. Whether you're paying off credit cards or buying a house, BlockFi helps crypto investors use their Bitcoin, Ether, and Litecoin without selling. Backed by Mike Novogratz, BlockFi is the leading crypto to USD lender in the U.S., servicing over 45 states. Interest rates start as low as 8%. Visit blockfi.com/talesfromthecrypt. That's blockfi.com/talesfromthecrypt to learn more about using your crypto without having to sell. And these guys actually have a very special deal going on for Tales from the Crypt listeners in particular. Sign up for BlockFi using the Tales from the Crypt URL, blockfi.com/talesfromthecrypt. You get $25 of free crypto added to customer collateral for loans under $10K. And if you take out a loan over $10,000, you're going to get $50 of free crypto collateral added. Applying takes less than 2 minutes. You can click the site if you have any questions or are curious at all. BlockFi.com/talesfromthecrypt. Check it out. It only takes 2 minutes. Try to preserve your crypto. Try to hodl onto it as long as possible. Services like BlockFi are making this possible. And warning to you freaks, very excited for this episode. Stick around till the very end. We have some special Bitcoin commercials for you.
Tales from the Crypt.
What is up, freaks? Welcome back to Tales from the Crypt. It's your boy Marty Bent here on a Monday afternoon, sipping on vodka sodas with a very special guest. He's in town for a day and a half. The pleasure of meeting him while in Riga, Latvia for the Baltic Honey Badger Conference earlier this fall. I'd like to introduce you freaks to the host of the Crypto Voices podcast, and maybe the best voice in all of crypto, and Bitcoin in particular. I want to introduce you freaks to Matthew Mežinskis. How'd I do?
Close. Good. Thanks, Marty. Mežinskis would be the Latvian pronunciation, but growing up in Ohio, it was Mežinskis.
Mežinskis.
Confusing all the way around, I know. But yeah, great to be here, man. It's great to meet you in Riga, and stoked for a lot of interesting New York Bitcoin festivities tonight.
Yeah, it's a big night here in New York City. For you freaks that don't know, it's a Soho Forum debate between Dr. Lawrence White and Ken Rogoff, just debating monetary policy. Larry's obviously free banking.
Yep. And
Ken Rogoff wants NERP policy, correct?
Yep.
So we'll see. That's going to be an interesting one.
Yep. Larry also the, one of the consultants, paid consultants now of this Initiative Q. Very exciting development in cryptocurrency.
Yeah, we'll get to that later.
It's not a cryptocurrency.
We're going to get to Larry later because I just listened to your podcast with him.
Fair enough.
And it's incredible. A couple things first. Crypto Voices, if you freaks haven't heard of it, go look it up now. It's one of the best, I would say, intellectually dense podcasts from an economics perspective on cryptocurrency in particular out there. It's one of my favorites. You and your co-host, Fernando Ulrich.
Ulrich, yep.
Do an incredible job and have done some incredible episodes. One we're going to talk about in particular, which is the episode you did on base money, which I found completely fascinating. I was actually lost on a car ride. I'd accidentally toggled a trip on my Google Maps without toll roads, so I got lost on like a back road for like 4 hours, and luckily Crypto Voices with your base money episode in particular kept me sane throughout that.
That's perhaps the best time to listen to an episode on base money. It's when you're lost in your car, and yeah.
But before we get all of that, as is per usual on this show, how did you get into Bitcoin? I have no idea how you found your way here.
Yeah. So I guess my story, and I don't, perhaps that's not known to many of our listeners, but I guess it's a bit unique. So I'm American, but my father is Latvian, from Eastern Europe. Although he is basically first generation American as well. I mean, he was born during World War II. His family came over after World War II. And so he basically grew up in the U.S. as well. But I have just all of his side of the family is from Latvia. So this is always something I wanted to explore and just, explore the family roots. So from 2006, after I finished college, moved to Latvia. And I've been there ever since. Was initially in real estate. I was analyst / acquisitions manager for a small boutique firm in Riga, which was good experience for me. But that was also like the height of the boom years. That's what got me interested in economics when it all came sort of crumbling down, asking questions, why does it happen, boom bust cycle, so on and so forth. And I heard about Bitcoin fairly early, I think, when a lot of the present sort of large figures, like Trace Mayer, Roger Ver, Eric Voorhees, these guys heard about it all in like early 2011. That was about the same time that I heard about it. But unfortunately for me at that time, it did not jump, headfirst into it. Took some time. I was reading about it. I was still sort of intellectually curious about all this boom bust cycle, economics, money. And I don't know, I just didn't take a flyer on it. Normally I would in those types of things. I do have an investing background just by career, and also just been investing since I was like 20 in stocks. So interested in all that stuff, but it took me time, which is a story I always tell people, like, you don't get into Bitcoin until you're ready. And so, yeah, for me, it took about that. It did take the first major boom wasn't the first boom, but the first major boom over 1,000 in late 2013 to really pay attention. And in 2014, 2015, started really delving in more. But that, I guess, is the general backstory.
Yeah. So were you just studying finance in college, or did you study econ intently?
Yep, finance. Had an international business minor.
Whatever that means.
So I traveled. It just means traveling basically on the school's dime, and partying in the evenings, going to a couple classes in the daytime. International business was just one of the best decisions I ever made.
Did you go to school in Ohio?
Yeah, I went to the University of Cincinnati.
Oh yeah.
So yeah, born and raised there. Basically, I just took off after college. And lots learned in Eastern Europe for sure. We can get into some of that, but
we'll wait till a little drunker to get into this.
Yeah. So we have some nice Latvian vodka here.
Oh, we got to talk about the Latvian vodka. It looks like a Russian bottle. It's a knockoff.
So you might have been a little bit surprised there. Definitely, it is sourced in Russia, but it's bottled, distilled in Riga. Next time you're at the bar, check out the back of the Stolichnaya bottle. You'd be surprised to see that it's distilled in Latvia. So it's very exciting.
And it's delicious. It's going down very well with this carbonated water we got.
The older you get, you got to just stick with those vodka sodas.
Yeah.
Skinny drinks.
Yeah, very skinny drinks. I was actually just in a fat camp, and this was my go-to drink. So I got a very high vodka tolerance right now.
Fantastic.
I don't know if that's good or bad. So let's jump into it. What I wanted to bring you on in particular is because I think you have a very firm grip on economics in general, and the competing economic theories and how they might apply to Bitcoin. I guess my first question is obviously you didn't come from an economics background per se. Was it the economic downturn that sort of forced you to explore these things? That Bitcoin push you more towards these theories? Yeah.
So a couple things there. So I'm not an economist. Fernando brings the intellectual weight to the show. He is actually a trained Austrian economist.
Yeah, he's studying under De Soto, correct?
That's right. Yeah, in Madrid. And but we both shared definitely an interest of like monetary policy specifically. It just was always interesting. Obviously, as Ron Paul famously said, money is one half of every transaction, so it's probably something important we should understand. So all the sound money Austrian economics stuff have definitely gone down that rabbit hole. I'd say from 2008, but even before it was just curious to me. I remember in Latvia. So like this is small. They called them the Baltic Tigers at that time. These are small countries, 2, 3, 1 million people, depending on which country you're in. Very, very small economies. And I remember just going to like these American Chamber of Commerce events, like after work, and people like drinking wine. People are like talking about how much money they're going to make. And Latvian real estate is like priced the same on a yield basis as like real estate in downtown Cincinnati, which is not like a crazy market. It's a normal mid-tier market, but still, I mean, if you understand some of the economics of what's going on there, it didn't seem to make sense. That things were so mispriced, and there was just not saying at all that I predicted the bubble. It did not at all. But I remember specifically at the time just thinking, this is so weird that everybody just thinks that by buying real estate specifically, Latvia just like the U.S., had a huge real estate dip. And it was like just by buying real estate, just by taking a loan, just by levering up, you can sort of, beat normal productivity. It seemed confusing to me. It seemed curious. So that's sort of was the genesis there. But yeah, definitely, obviously, as you go down the sound money rabbit hole and start to see that Bitcoin possibly has the best characteristics of any money ever invented, it's hard to look back once you find that and understand it.
Yeah, and that's it's a huge theme on this podcast in particular, is that people, like you said, Ron Paul said, money is one half of every transaction on earth, and it's not until I found Bitcoin, at least, I really started questioning the essence of what is money, and that's something that I think a lot of people have never asked and don't even know how to approach to ask if they had to begin the thought experiment by themselves without any outside help. So that's one thing I think Bitcoin is doing in particular. That is very beneficial for society overall, is that it's having people question these cornerstones of their lives, money being one of the most important.
Yeah, and I can jump in. I mean, to sort of, I don't think I finished your initial question, but so on the show, like the reason, and I started the show basically, just wanted to do something creative. I've been buried in spreadsheets most of my professional life, doing some consulting, analytical things, and I just want to do something a bit more creative. So that was where the show came in. Knew that I wanted to give it that sort of monetary policy bent, or just keep focusing on those questions. No pun intended. But just sort of one general thing to say, sort of tangent to your prior question. I mean, it's not necessarily my intent to it's really just about trying to discover things that I'm curious about. That's the reason I started the show. It's great to have Fernando on there, who has this sort of Austrian trained background. And it's just been interesting asking sort of the same questions to a variety of different guests, some economists, some business people, some Bitcoiners, whatever. I think if you, and just a little bit to plug the show about what we're trying to do, like, I know people probably don't know, even what I've just said, rambling this early minutes of this show, people don't know much about my own background, but that's sort of by design. Like, I'm not trying to be some, Bitcoin figure. Obviously, as many people have come to learn, it doesn't really even matter. It's whatever the nodes are doing is what matters in Bitcoin. And that's all very exciting stuff. But the point is just to ask questions, not trying to be any sort of Bitcoin soothsayer or anything. I'm intellectually curious myself about these topics, and I'm far from an expert. So like so my view is that I'm sort of an economic observer. I have an interest in money and credit, and I think that Bitcoin probably will be the best money ever invented. So that's sort of, again, back to your initial question, like why I started it, why we're doing it.
Yeah. And I'm trying to figure out, should we jump into why you think Bitcoin's the best money ever, or should we start with what your calculation of the world monetary base and then jump into?
Yeah, maybe base money, I think, next. So I think that's one thing that we're doing on the show, and longtime listeners will know we've asked this to many economists, many guests. One thing with Bitcoin that is interesting is everybody's trying to quantify it, to value it, to compare it with other real world things like other money supplies. And, technically, economically, from a perspective of money, it's hard to do if you don't have like a full grasp of that. And again, I'm not saying I have a full grasp. I'm not an economist, definitely a caveat I want to make there, but I do have this sort of understanding, especially working with Fernando and reading the things that I've read. A key difference between money that circulates in society today and bank money, which is like M1, deposits, PayPal, Venmo, and money, meaning, basically the dollar or the euro in your wallet, calling that money. The key difference is that an IOU, basically. That's the difference. So money, base money, the monetary base, this is this is something that I feel like you should edit this out because I'm waiting too long to describe it. But
No. This is what Tales from the Crypt is all about. These candid moments where you're thinking through your
barstool moments. Definitely not how we do it, as our listeners probably know. I try to get a quick hour of just, if you put it on 4x speed and you can just roll through it, or in your car. But let's say it like this. So most money that we think about today, we talk about it as being, in the money supply. It is actually a claim. It's a claim. It's an IOU. It's started from, a bank.
And would you say that IOU represents future production all the time?
It represents yes, it does. Yeah, that's one way of putting it. Basically, it represents a claim on the investments or the asset side of the bank's balance sheet. But it's not always backed one-to-one by cash, which is what a lot of people think that it is. And that's fine. I mean, I'm not a 100% reserver. We've talked about this as well. We could maybe get into that a little bit here. But basically, to bring it back, it is confusing. Even myself trying to lay it out simply, it is confusing. But there is a money supply in economics, in just the way that money has developed, that is comparable to Bitcoin. So one thing that I was always sort of seeing and thought that it could be corrected a little bit, on tweets or whatever, people writing articles like, okay, Bitcoin just passed, the M1 money supply of, Venezuela or something. As an economic sort of basic definition, it's not comparable to a checking account, because those are basically that's a debtor and creditor relationship with the bank when you have a checking account. And we can get into what that means. But with the monetary base, that is basically the most irreducible form of money. It's money that, Fernando likes to say, it's the ultimate asset of settlement. This is it's been called reserve money by Asian banks. It's called basic money, or the monetary base, usually by Western banks. It is settlement media by banks and governments. So that's what it means today, and that's called the monetary base. And as a comparison, we've compiled this on Crypto Voices. We have an episode that you're referring to where we sort of explain this, I think, better than I'm explaining now. But the total base money in the world is about $20 trillion comparable. So if you look at the dollar, the euro, the yen, the yuan, the Brazilian real, the Indian rupee, those are the big ones. And then it falls off pretty quickly. The British pound, of course, as well. But the big four are the dollar, the euro, the yen, and the yuan. And the $20 trillion figure that I mentioned are just under that. I've actually listed it. I've looked at IMF definitions of what's a pegged currency, what's not. That basically is going to encompass about 93% of the world's GDP. So we're not to 100 yet, but it's a diminishing return thing. It's not going to go too much higher than 20 trillion. So that's actually the number. That is base money in the world that banks use to settle transactions. And what the monetary base is comprised of is, again, physical cash, physical notes that that you hold in your wallet, and then something called bank reserves. I don't think we need to fully describe that yet, but again, it's basically how banks settle. At the end of the day, banks would settle by net differences in their bank reserves. So those two things put together are the monetary base, and that is the money supply that at the end of the day should be compared with Bitcoin's supply of 21 million, which, as we talk about in the exhibit, Bitcoin, possible, I think likely future base money of the world. We have fiat money, which today is that 20 trillion. And then we have past base money, which has been silver, but, as Saifedean writes, and a lot of people recognize it, has been gold mostly. So that number of all the gold in the world minus, maybe 10, 15% of industrial recycling and industrial use, somewhere around 7 trillion. Okay. So 7 trillion for gold, 20 trillion for fiat. And what's the latest? What are we under? 80 now?
Let's see.
We're under,
I don't know where we're at.
70 maybe.
Yeah.
For Bitcoin.
We're around 4,000 right now.
But billion.
4,000 Bitcoin times how much is that? 17.5 or dispersed on the market right now.
Exactly. And not all is circulating
No, but so for Freaks out there, I think this is an important distinction you guys are making, because I would agree this is what we should compare Bitcoin to, and that's a function of me believing in. I believe it was Hal Finney was the first to describe Bitcoin as an international settlement layer for future central banks or future free banking society.
Yeah, he did indeed, and it's confusing as well, because there are these terms that get thrown around that I think are that throw people off. Like if you may remember Eric Voskuil's presentation in Riga, he talked about how using the word reserve currency was misleading.
One of the most fascinating people I met at that conference, by the way.
Yeah, he's a very interesting fellow.
And check out the 2-part episode with Crypto Voices.
Thanks, buddy. Thanks. So very interesting fella. I think he has a very good perspective on economics. But even his claim about saying that Bitcoin won't be world's reserve currency in the future, I agree with that, and we can get into why I agree with that. But it's even more confusing because we don't have a reserve currency today. Now, everybody says the dollar is the world's reserve currency. What they mean is that the dollar is the world's settlement currency. Gold is priced in dollars, oil is priced in dollars, so on and so forth. But banks, they're not reserving dollars. They're reserving government bonds. Now, those bonds are priced in dollars and euros and yen, and China specifically is an interesting case. But central banks, they don't hold like a huge stash of dollars. They hold what's backing their dollar is a government bond. And that note, which we'll talk about in this base money presentation, like if you took a dollar bill out of your wallet, you went to the Fed, say, hey, I'd like to redeem this. I'd like to redeem this for your reserves. They would give you 4 quarters, or they would just give you a new note.
Right.
It's an irredeemable currency. So in point of fact, the reserve currency of the world idea was completely abandoned in 1971, when we went off the gold standard. That was the end of any convertibility. So for about 50 years, we've been in a world of zero convertibility money. It's just its own thing right now. Like we talked about Murphy a couple weeks ago. He said the same. Dollars are used as money. People demand them as money. People hold them as money. And that's fine. But it would be actually incorrect to say that we have a reserve standard today. So I'd actually even disagree with Eric on that point. I know where he's going with that topic. He's referring it back to gold. But we haven't had a convertibility standard in 50 years anyway. The dollar, the euro, the yen, they're completely inconvertible. And if a central bank can't meet your demand to redeem, like one note for note, like just say they don't have any on hand, they have the license to print more. And the monopoly, so this is what you finally have to get to with fiat currency, is the main crux of the issue, if there is one, with fiat money, is that there are these big institutions that have license to print, ad nauseum without any restrictions. So rather than, and this is where I like the work of Larry White and George Selgin, rather than having a free banking system where banks are competing, redeeming on each other, keeping each other in check, which we've had in different periods of history, which I think are fascinating. We can talk about that too. Now we have a system which is basically a few main governments around the world have monopolized money. It's irredeemable, and they have a license to print as much as they want. Now, I'm not saying they do that carte blanche all the time. They don't understand risks. I mean, we've had a dollar system for 50 years. It's been working. I mean, could you imagine being like a gold bug in like 1979? When gold was going up to from $35 an ounce to $800 an ounce.
Right.
You probably would have thought, this is it. We're going back to gold. The market's shown it can work. But no, the central banker, Paul Volcker, actually pricked that bubble, took interest rates to 20%, and he cut off that massive central bank inflation that happened after the end of the gold standard. So you never know. The monopoly power is extremely strong. But it is the monopoly power at the end of the day that is sort of the crux of the issue, is that there are these institutions, central banks, as Adam Smith said, a monopoly. It's not a big firm. It's not like from the board game. It's not a company that is like so good that it has 90% of the market share, can come in, undercut all your mom and pop shops and then later jack up prices. That's not a monopoly. Those things can work at certain times and places for certain periods, but they always have the threat of free competition coming in and undercutting them. A monopoly, at the end of the day, is a firm, a private firm, that has a special privilege from the government. And that's the key, is they have a special privilege. They have a license. So that's what we're up against with Bitcoin.
That was a very incredible, long-winded explanation of what the Fed is. And so I guess first question, do you think that the last 50 years will be looked at as an aberration on the long scale of history? You said, I mean, you alluded to the fact that this can last a lot longer than we expect, but I would completely agree with that. But I do believe at some point there will be, this will hit a head where the experiment sort of unwinds, and we were like, how the hell did we even get to this point where we thought this was okay? So that's like another theme of this podcast, is that we were born at a point where we might be in a collective delusion. We might be a part of a collective delusion when it comes to money and what it is and how it operates, and we may have to rewire 7 billion brains to recognize this problem and then recognize what the solution is.
Yeah, completely agree with the way you asked that question and sort of the premise of your question. A key phrase that you said that has been said a lot by Austrians and free market, capitalists and voluntarists, is at some point. We always think, we have all these negatives in the negative column, you stack it up, and we have just a few positives. It must be clear that at some point, the house of cards is going to come down, it's going to end, we're going to get back on a more sound and stable standard. That definitely can go longer than you think. So I try to be humble about that, and I don't think you'll ever hear me making that case with Bitcoin, because I honestly don't know. It, like, one of the things that's speculated a lot is this idea of like a Fed coin or a central bank coin that could compete. I don't think that will materialize that way, because I think the government usually shows pretty accurately that they can't run websites. They can't run healthcare websites. So I don't necessarily see a government designing a nice virtual currency, as they call them. They always call them virtual currencies. A nice virtual currency that's better than Bitcoin. But what I do see, and I don't know how much of a prediction this is, but I do see stablecoins becoming monopolized by the government, and perhaps those are the only, quote, virtual currencies that could be, legal. Is that it's not a prediction. I don't have anything to really base that off of, but it's definitely a trend that governments typically do. They see something that kind of works and they try to monopolize it. They see something that works and they try to use force to, Selgin and White make this point all the time with money, which I really like, is that any monopolization of the money supply by a government is precisely born in the need for to take taxes. Basically, it's a fiscal need. They have their own budgets. They have their own, sort of lords and things that they need to take care of, their castles and their lands and so on and so forth. And I'm not trying to be too cynical there. It's just how it works, is that they try to monopolize for their own fiscal needs. So what I do think with stablecoins, which are an opportunity for them, is obviously this is something new, somewhat programmatic, programmable money like the Gemini dollar or Tether. These things are making news headlines. I heard, I can't remember if it was a private or a public source in Asia, was saying they were worried that they needed to get ahead because all this USDT, all these abstractions of the dollar were taking place, and they didn't have anything coming for the yuan or the yen. So like Asians were worried about this. Stablecoins are definitely a phenomenon that people are talking about a lot. And though I believe that we don't need one at all once Bitcoin takes hold, like Bitcoin would be the ultimate stablecoin, and free coin, and so on and so forth. That is an opportunity. Like, that is sort of the nose in the tent, so to speak, that the government could seize on to say, okay, there's a few issuers of these stable coins. They're doing it well. They're backing it the way we want to do it. These are the ones that, if they don't go outright monopoly, saying those are the only ones that can issue it, they will at least favor those strongly. That to me seems like a trend they would do if the government does get involved, because I don't think they're going to design it. I mean, no one, no good developer is going to work for the government to help them design it, but they could definitely monopolize a few that have, and they've done this in the past. Like, this is what the Federal Reserve Act was. This is what most central banking acts are. They're monopolizing big private players, and using their sort of, standing in the market for their own benefit. That's just what they do.
Yeah, they can create barriers to entry via accreditation or basically regulations and stuff like that, obviously. But then, like what we're seeing, actually, I've talked about this with Matt Odell. What we're seeing is obviously Tether is the most popular and I would argue successful stable coin up to this point. It's always in the news, and Tether works because it works the way it's supposed to do. It's like it's allowing people to skirt U.S. regulations and get a peg dollar a peg digital dollar online to trade Bitcoin. I would argue it's the most successful stable coin you see. But what we're seeing now is like Gemini, Coinbase have gotten the okay from the government to create these stable coins, and they're sort of posturing as, hey, we went through all these hoops to make sure we check the boxes off in the regulations, and it seems like they're going after Tether in a bit of a witch hunt to say, hey, we had to do this, you should have to comply too. And maybe that is the Trojan horse for the government to step in and try to input their monopoly power via regulations and stuff like that. I would argue we're already seeing that happen.
Yeah.
But then, like, the whole thing of I think stable coins are a funny meme right now, and I think greed is going to kill stable coins, because stable coins are only stable until they aren't, and the proliferation of more stable coins makes every other stable coin to come before it a little less stable, because you have competition for something that's supposed to hold a peg, which has proven in the traditional economy to never really work too well.
Yeah, I mean, unless the government just comes down with an iron fist and says, like, these are the only ones that will be allowed, and these are the only, we're going to do it this way. We're going to issue our own dollars our own way, through our traditional, FOMC meetings. You're going to get some bulletins and some notices about how we do this. But if it's going to come to virtual currency and things you can pay taxes in and things you can do this and that, you can only use, like, the Gemini dollar or these things. Yeah, I mean, Trojan horse, that I think that's the best chance for them if I had to look at how they would compete with Bitcoin. How it will play out, I genuinely do not know. And I don't even know if we're speaking the correct, like, trend there, but it definitely thinks, like you said, I mean, it's a meme. Everybody's talking about stable coins. Everybody thinks stable coins are like the next big thing or whatever, but it's just taking, one abstraction, which is the dollar, the euro,
abstracting it further.
Yeah, and abstracting it further and acting like it's got some bells and whistles. There's nothing there that's novel or new or good or sound like Bitcoin is. Well,
exactly. And to your point from earlier, like, the government does not have a monopoly anymore. Bitcoin does freely compete. And I guess the assumption, I don't want to say you're making any assumptions, but in the thought experiment we just played out there, the assumption is that one government or a coalition of governments would be able to form-fit this regulation across the world, which may not happen. I don't think that will happen.
It's a hard.
So that's the beauty of Bitcoin. Like,
exactly.
You try to cut off the head somewhere, somebody else takes that as an opportunity.
Agreed.
And so that's where I think. I mean, I wrote about it today. I wrote about the yellow vest. Somebody in the yellow vest protest had to buy Bitcoin, and again,
I saw the headline.
Yeah, Bitcoin presents an optionality that hasn't existed since 1971, like you were saying. And even in 1971, that optionality was not as good as the optionality we have now, because government seized gold and they held it in a centralized location. So they had more control over the supply of that sound money than they will ever have over Bitcoin at this point.
Yeah, and to talk about gold a little bit, I mean, I love gold, like I think a lot of Bitcoiners do. There's some Bitcoiners that don't at all. I think about some Bitcoiners that are like, just don't.
Well, I think just because of what I just said, like the fact that it's been centralized to an extent with its hold, or the way it's housed by governments and the way it's been seized and its basically hoarded by governments at this point, I believe.
Exactly. I would
case
agree. And I think if you're talking about money for the digital age, which we're moving into the digital age, we're already in the digital age. But if you're talking about the future of a monetary base for society, it only seems rational that you would want something that's much more secure, much more transportable, much more immutable than gold. And like you said, it has been centralized. In fact, I think it was actually Nick Szabo that wrote this, I think. But it could have been the big transport problem, or basically with gold, security of transporting large amounts. That was really the end of the gold standard in 1914 in World War I. It was German U-boats taking down British boats that were transporting gold to the Fed because they were losing it. So like, gold just doesn't work certainly in a system that has developed now.
An adversarial system, I would say.
In an adversarial system, in a large central government system, which has, for better or for worse, happened over the course of the 20th century. Gold has shown to have failed there. And again, I don't have a problem with holding it as an investment or as a hedge or as an escape hatch in similar ways that Bitcoin does. But it has shown to have a tendency to be centralized, and that is unfortunate for gold. But I think just shines a light on what Bitcoin can do.
Yeah, and it's that's been the biggest knock on Bitcoiners to this. They're not the biggest knock, but one of the biggest knocks is you guys are just neo gold bugs, which perturbs me a bit. Perturbs me a lot, actually, because I wouldn't consider myself a gold bug at all, and I would argue that the advantages that you just laid out of Bitcoin over gold, not being centralized and being a true, like I could walk around naked with 12 words in my head and transfer millions of dollars. I believe that is a 10x improvement on gold. So I wouldn't consider myself a neo gold bug. I would consider myself a sound money maximalist to a degree.
Yeah. I think my view on that idea is that it is true that Bitcoin, this goes back to the digital gold idea of Bitcoin, and there are critics, obviously, against Bitcoiners who say digital gold or store of value first before you get to medium of exchange. There are more similarities with Bitcoin to gold than there are Bitcoin to fiat in that comparison, because like the old monetary base of the old, whether it was the gold standard or even before, any system, gold, really the classical gold standard was like it was very short. It was like late 1800s to World War I. And that was it. But gold as money, as a basic money, as the monetary base, as sort of the settlement media, that had been going on for millennia. But the thing with gold is that it has this sort of barbell problem. It has like the sweet spot is in the middle, but on the one side you have this like small change problem, and on the other side you have this big transport problem, like security. And it just was never easily solved with gold. I mean, you had like in Britain, you would have like there was a tri-metal system. They had copper. In the U.S., they had a bimetal system. Actually, the U.S. was silver before they were gold. I think still in the code, I didn't know that. A dollar bill is defined as 371 grains of silver.
Really?
Yeah, which is about 80% of an ounce.
Okay.
That is the definition of a dollar. Fernando is actually going to do it at LaBitConf. I'm going to head down there after New York here. He's going to give a speech on what is a dollar. So all this stuff is nebulous. But the point, the thing that is confusing, and I think people just quickly attack Bitcoin, is that they think, it's just going to be settlement. It's just going to be like sort of this store of value. It can't scale, so on and so forth. But that's if you've studied money long enough, and I wish I had a simplified way to say this, but it's always about trade-offs with money. Like there is no silver bullet, so to speak. It's always about maybe using a different metal to spend a little bit less, maybe use a different metal to spend a little bit more, or maybe even using paper in day-to-day, which I think is totally fine, by the way, using paper. I mean, like that's just how you solved some problems with gold over time, like some natural problems that they had. And with with Bitcoin, I actually think that's the greatest lesson, and it's a lesson that Bitcoin Core, whether they know it or not, is shown to be following, is that there are trade-offs. Like there are trade-offs in security versus economics. Like my take, and again, it doesn't matter for me. Like if Roger wanted to claim that the whole problem with the scaling debate was censorship, we actually interviewed Roger about the time that Bitcoin passed 10,000, about a year ago. Like during the interview, Bitcoin was passing 10,000 for the first time.
And this was at post fork, right? Yeah.
This was post
Bitcoin Cash fork.
Bitcoin Cash pre Segwit 2x failure, I believe.
Okay.
But I believe. But it was the first time that Bitcoin passed 10,000, like during the interview. And I think it was CoinMarketCap 10,000. It might have not been GDAX. In any event, it was interesting to talk to him about that. And I posed, like everybody's talked about this like 1,000 times. People might not expect or want to hear me go into this again, but I posed the question like, I'm very sympathetic to your views, Roger, about Bitcoin not being able to scale on-chain economically for some reasons. But isn't it enough for you that the Bitcoin Core nodes have signaled and have basically just decided as a network that security is more important? And, it was, the
road script he throws out.
It was the road script, yeah. I mean, the censorship and the other deflections, I guess. But to me, that's like the crux of the debate. That was the crux of the scaling debate. That's the crux of the block size limit debate. And it's still going to go on. We're going to see this happen more and more. But it's economics versus security. I mean, it's a trade-off. And it's clear that the Bitcoin Core roadmap is in favor of security over economics. And I think it's important to recognize that there's certainly good economics there, but the security is paramount. And that's fine because actually, you know what? If you look back at some gold monetary history, that's the same way it developed as well. So we're in good company there. But on the other side, obviously the main security risk that we're going against, or the nodes I should say are going against, is obviously the cost of running and validating and centralization risk. So
yeah,
it's the same trade-offs that there's always been. And I think Bitcoin Core has shown really from the early days, tremendous foresight. Nick Carter said this as well when we interviewed him a couple weeks ago, like tremendous foresight to recognize the importance of that security and that trade-off. There absolutely is a trade-off. Like, I don't think anybody should deny that there's a trade-off.
No,
trade-off.
No, I don't think, and I don't think anybody worth their salt would deny it. And I think the Bitcoin Core team in particular just has this mindset because they've got so many like lifelong cypherpunks and distributed system engineers who actually know how to build these systems and understand the trade-offs. And that's the biggest knock on Ethereum. Like if we're going to compare chains, like Ethereum obviously did not understand these trade-offs from the beginning. And there's a lot of arguments made with Bitcoin in particular that maybe we should actually lower the block size. Because we're running experiments. We bought one of the Casa nodes here and been running experiments setting it up. And for users who are using it, what we found in like the Casa group users, Hasu in particular, who you met in Riga as well, is the bandwidth problem that you have when like setting a node. And again, security is imperative. If we want to rip away the government's monopoly on money creation, we can't make it so they can find a few amount of nodes and shut them down. So being able to run a node for an individual user is imperative. And we're finding that we might even need to lower the block size to make it so that is possible in the long run. So I just think that, like you said, the trade-offs have been weighed pretty heavily. I think Bitcoin Core is doing a great job. We're going to let you take a little pee break here, and then we'll talk about Lightning, because I think Lightning is a great...
It's just filling up the vodka break. It's not a pee break.
Oh, filling up the vodka. All right, I'm going to take a pee break then.
All right.
And we'll get right back to it.
So let me know when we're back. Or are we just recording? Can I just go?
Yeah, we're recording.
So back now from this little break. Fun fact about Stoli, Marty. There's actually a brand dispute, a former Soviet Union brand dispute between Stoli, the brand. So this you were surprised that it's actually distilled and bottled in Latvia, and it's a Latvian company that distills it. There's I think it's a Luxembourg company that owns all the holdings, but there's a since the Soviet Union ended, it was bottled and distilled there in Latvia, which was part of the Soviet Union, but basically Latvians just took control of it, and the Russians or some contingency of Russians did not want that to happen. So there's a competing Stolichnaya in Kaliningrad. And so if you're in Russia, and I think like some parts of Europe, like maybe Belgium and Holland, if you see Stoli there, it's going to be the Kaliningrad Stoli.
Really?
So they're competing Stoli brands. You would never know. But yeah, it's it all looks Russian, but the Stoli that you will usually see in the Western world is Latvian Stoli.
Well, it's delicious Stoli.
Very exciting.
That's Stoli and Tito's are my two favorite vodkas of choice. And this is actually only the second time we've drank vodka on this podcast. The first time was with Bitcoin Sign Guy, and it is one of the most highly touted episodes we've had.
So I feel honored. Well, I hope. I'm actually positive I won't compete there, but
I don't know. I don't know, Matthew. I don't know, Matty. I think we're gonna get there. Vodka may be the elixir that brings out the magic.
Good.
So we were talking about what were we talking about? Yeah, gold. We were comparing gold and Bitcoin. And
important
Bitcoin
comparisons. Important to talk about, flesh out.
But
interesting.
I think we would both agree that Bitcoin has some comparative advantage. Yeah, the edge in many places. And like you were just describing, you were talking with Nick Carter earlier, and what he's big on is the narratives and how the narratives have evolved throughout time, and Bitcoin in particular. A lot of the big blockers who forked off the Bitcoin Cash have been touting that Bitcoin is the easiest way to quickly send money at a cheap fee for the masses. We quickly found as the network became more popular that may not be the case, and to make that possible, you would have to increasingly raise the block size, which is a trade-off you have to make from a security perspective, making the chain less secure. I've been a big believer that this space is filled with a bunch of impatient assholes that don't know how to wait for the infrastructure to get built out, and it seems as though we may have that infrastructure being built out in earnest with the Lightning Network. Yep. And going back to the narratives part, so with narratives in particular, people have been confused over what is actually I shouldn't say people have been confused. The dominant narrative has shifted over time, but I believe the best narrative has existed since the early beginnings, which is Hal Finney's narrative, which we touched on earlier. And it seems like Lightning Network is enabling a sort of free banking system where Bitcoin at the protocol level can be a reserve settlement layer, and then Lightning can be your medium of exchange layer where a lot of the economic activity is happening.
Yeah. So a couple things there, and I think I'll probably go on like 10 tangents, so let's see if we can get through them. But firstly, regarding Lightning and what it's doing compared to maybe another prior system or whatnot, it's very similar, in my opinion, to how banks have generally evolved. And that system, believe it or not, it's better than what I'm about to describe, but that system actually has always been a system of IOUs and claims. Mm-hmm. And again, it's about trade-offs. It's about an efficient form of making payments. But the thing is with banks, like banks were never there. Banks were never created to tell us what money is. Banks were there to allocate capital efficiently. They were there to move capital from its least efficient point to its most efficient point, and in the meantime, facilitate payments. Like that's what banks were for. So all banks do is move IOUs around. That's all they do. They don't tell us what money is. It's not banks' decision. It's not even with the government monopoly of the banking system, which is largely taken hold today. And as evidenced by the fact that we have irredeemable paper, basically, irredeemable government money, which is just its own thing. So as we talked about, that 20 trillion, 80% of that is the 4 largest economic blocks in the world. That's just, it's just how the system has evolved. But banks, specifically, what they do day to day, they don't tell us what money is. They're just pushing IOUs around. So when we look at something like Lightning, I think it is amazing. It's definitely trustless in many ways, and it's better than any sort of bank IOU that has been created in the past. It still is something slightly maybe akin to an IOU. It's not a...
Ooh, you're about to trigger people.
Yep. Actually, I will quote Peter Todd said this, I think, which was a great quote. He was responding to someone, I can't remember, who basically said in no way is a Lightning channel, a Lightning payment, Bitcoin on Lightning, an IOU. And he responded, he said, no, it's not, though, meaning, yes, it is. He responded and said, though Bitcoin on Lightning, can be sent trustlessly across channels, there is the possibility that the sender could try to take it back, and in some situations may succeed. He said something like that, but he said, don't oversell the security. And then he said, Lightning is basically some sort of a middle ground where it's not technically an IOU, but it's not technically, obviously, on-chain Bitcoin. And to me, that's just an obvious statement. It's a great statement. Like, to say that Lightning is like a middle ground for payments is, or for IOUs, I guess I should say, Lightning is a middle ground of what traditionally has been an IOU and not, is a great improvement on what we've had.
An upgrade.
It's an upgrade. Yeah. And again, so a lot of the problems that we've had with the gold standard and throughout history is we have had some speculative attacks by rival governments, rival banks, and that causes this quote unquote instability with the standard money. But with Lightning, obviously it's not like that because it's locked on chain. There's all sorts of anonymity, things in place. It's onion routed. And there's no it's not going to be that tomorrow it's ready. It's just, this is the beautiful thing about technology as well. It compounds upon itself. It gets better and better. So I think that it will prove to be a supreme form of a layered payment system, but it is a layer. It's not quite M1. So I guess maybe what I should do, and just stop me if you want to talk about a different
keep going
topic. But so describing how it would work in let's say like a gold standard system. It never, first of all, this is another thing where to defend the free bankers and defend the free market finding the right solution. It was never the market will always find a solution. So it was never gold merchants were collecting gold from gullible people. They put it in their vaults. And then after a while, people didn't want the gold. They just wanted the paper, and they started to trade the paper. And then the gold merchants realized, hey, we're greedy gold merchants. We can start to lend out this gold, and no one will be the wiser. It never happened that way. In fact, the paper was demanded. It was demanded. This is what Selgin and White write about, which I really appreciate, and I think it highlights this system. Mm-hmm. The layered system on top of gold was more efficient than, again, this small change, sort of big transport problem. The sweet spot actually turned out to be paper more often than not. Adam Smith wrote about this. And yes, it is true that not all of, there was actually never a 100% reserved gold system ever. The only times that it was really tried was actually by governments monopolizing it, trying to do it, as is quote unquote better, and they all failed spectacularly. They all ended up lending money themselves and not keeping appropriate reserves and couldn't keep up with the market. But as Selgin and White and others have written, there have been times in history which have shown the brilliance of the free market using this sort of a layered system, and it worked fine because it's cheaper to go outside of the base settlement media, which was gold, and it was cheaper to start using claims and notes and things that were easier settled between banks than the actual coin, the bullion, the specie, than the actual settlement media, which was gold. So it is with Bitcoin, but it's in a very, very unique, absolutely better way. The settlement media in Bitcoin is still on-chain Bitcoin. It's when you hold on-chain Bitcoin, no one else holds it. It's absolutely your asset. It's no one else's liability. It's 100% That's basic money. It's the ultimate asset of settlement when you hold on-chain Bitcoin. It's very unique. It's just like holding $1 in your wallet, or it's just like holding a gold coin, in your hand. But obviously, we need trade-offs to make payments. Like we can't. Everybody knows that we can't do every payment in the world on the blockchain. That's obvious, right? We can't scale every single payment.
Not to some people.
Yeah. Well. If you read the history of money and banking, it should be obvious. This is my point. If you read the history of money and banking,
that's what I was going to say.
It should be obvious to you.
For those freaks out there who are not so inclined to read, let's talk about some examples. You're talking about Larry and Seljan pointing out some examples in history where it has worked. So let's talk about some of these examples. So
Canada is a good one. In Canada, they had no central bank. They had competing private banks.
When are we talking?
Late 1800s. Yeah, that's a good point. Late 1800s to 1930. Canada didn't have a central bank. And if you look at the notes, which are basically fiduciary media, this is notes that the banks issue that are traded as money. But again, as we talked about at the beginning of the episode, that wasn't base money. It was an IOU. It was a claim. The banks were, they were issuing out to participants in the Canadian marketplace. The need to hold currency was always highest at the harvest time, because when in the spring, summer, fall, that's when you needed more currency. You needed to pay workers more. So actually, the need of currency changed based on the seasonality. And you can look at a graph. Seljan has showed this many times. You can look at a graph of Canadian banknotes issued, on a macro level. And it's like this beautiful sawtooth pattern where it's higher in the summer and then it's lower in the winter. And he's like, do you think this is some like lovely central bank, nice top down? I can't even flatter the people that focus on planned economies, but trying to make it seem like, oh, you must think this was a beautifully planned top down thing. No. Canada didn't even have a central bank, and they beautifully, in this like sawtooth pattern, which was always moving up, they were increasing the currency when it was needed, decreasing it when it was not. And that was done through a system of claims with competing banks. No one ran off with the gold that was deposited there. No one ran off. Like people didn't suffer from hyperinflation. The banks were able to branch, which was another problem with the U.S. system at the time. Even though the U.S. didn't have a central bank, U.S. central banks couldn't branch. Was a huge problem. Okay. So notes would circulate at massive discounts. Like you couldn't have a note from Washington go to like Ohio because it wouldn't be accepted at like a massive discount. Yeah. So there were peculiarities of the U.S. regulation system that were bad, even though the U.S. didn't have a central bank at the time. But he shows that with the least regulation possible, the purest sort of free market system possible, and nothing is like, there's no equilibrium in markets. They're always tending toward one way or another. There's always some monopoly force.
It's always information asymmetry.
But you were able to see with a situation like Canada, and it happened in Scotland, it happened in Sweden, similar examples, that currency was able to be allocated where it was needed, where it was demanded, when it was needed, and when it was not, it was not. And this happened in the form of paper notes. And so it worked. It worked well. It was cheap. It was efficient. And Canada had a worse depression, in fact, for other reasons, global reasons.
Yeah, I was going to say, did World War I end this?
Right. Well, in the 20s as well, there was a lot of contagion, and like there was depressions everywhere in the 20s, at the end of the 20s. But Canada's was worse than the U.S. The U.S. had, I don't know how many umpteen hundred banks fail. Canada had zero. Now, Canada was a smaller country, for sure, different economic.
How'd they fare worse then?
Well, the depression, like the economic drop in activity. And this is, again, influenced by global factors.
And the banks didn't fail.
But the banks didn't fail. That's the key point. So
that's interesting.
U.S. had, I should know the number, but U.S. had, I think it was hundreds. I hope I'm not misquoting. Let's just say it's a lot of banks fail. Everybody knows the Great Depression. It was horrible for banks, bank runs, so on and so forth. And the Fed existed then, by the way. So the U.S. had a central bank.
Fed was about
Canada
10.
had no central bank. It had a very decentralized system. And it did suffer from global, problems, but no banks failed. And no one lost confidence in their bank. So these are lessons that we can learn from, that like the market actually can deliver it if you let it.
And money in the market may be more separated than people perceive in their minds, right?
More separated, or what do you mean when saying money in the market mean more separated?
Like they operate separate of each other. Like
yeah. No,
Yeah.
I got what you mean now.
Yeah.
Yeah.
Whereas I would argue that most people assume that they're very intertwined.
Exactly.
In today's world.
And there are plenty of examples, and so Seljan uses this example as well with private note issuance, which I agree with. Is like there was never a story again in the Renaissance that like some gold broker just ran off with the gold and no one got it. If anything, it was regulated 100% reserve facilities that showed to be the worst. Also, there was never a time where there was 100% reserved private money. It was usually like 30% would be the max from like the 1500s, 1600s. And then down into late 1700s, 1800s, Industrial Revolution, Scotland, specie reserves of notes outstanding got to like 1 or 2%. And it worked, meaning there's 1 or 2% of gold outstanding of the notes. And it worked fine. There were no runs on the banks. There was no problems. There was one bank, I think it was called the Air Bank. They did inflate. They did issue more notes than they had reserves, and they wanted to grow quickly, so on and so forth. They took risks. But what happens in this system, Seljan uses this example, it's like a chain gang. Like, people recognize, like, hey, because at that time, which was natural and normal, we were under a gold, basically a gold standard. Mm-hmm. There was money in the vault. It was a convertibility system. You could convert the note for gold if you wanted. If you wanted, you didn't have to. Most people didn't feel the need to. But if you wanted, and there were competing banknotes, different, but like it wasn't just $1 bill. There many banks had many notes with their different logos, completely competing freely in the market. But it was the same gold standard. But it never happened that the sound banks were run upon. What happened is the unsound banks were run upon because it would be natural, because you start to see, hey, these banks are clearing every day. Like, they're looking at their notes and their coffers. They're looking at, the trade. And some competing banks we're seeing a lot of Air Bank notes. Maybe we should go ask them for the gold. Mm-hmm. And that's what they did. And the bank failed like spectacular. I don't know.
So the banks orchestrated a run on that bank.
The private banks orchestrated a run on that bank. It wasn't like the people. It wasn't like some morality issue of 100% reserves.
That's an example of the system keeping itself in check.
Exactly. And no central bank there. No central bank running at that time. Mm-hmm. So these are really interesting examples of where the free market can do it better. And Seljan also uses this quote, which I really like. He says, banks weren't failing because they were run upon. Those banks that were run upon because they were failing. Mm-hmm. People could recognize that. It wasn't like this contagion or this, everybody running around with their heads cut off, or like the It's a Wonderful Life. Like, people quote the movies when people are at the bank.
Right.
Those things, unfortunately, they're movies, and people don't actually read the history. So, again, the reason I'm quoting all this, it's been muddled throughout history that free banking works. It works. People like Seljan and White, who we can talk about, we're going to see tonight, they've argued convincingly, in my mind, that free banking works. The market can keep things in check. But a key component of money always is this sort of check and balance. Like, you have, not check and balance, but this trade-off. Mm-hmm. You always have trade-offs. Like, the system worked well. It worked well enough when it was allowed to be tried. But yeah, you had paper. You had some banks that were fractionalizing more than they should have. Most of the time that was corrected. But actually, most of the time, people didn't even feel the need. They didn't feel the need to carry the coin around. So this is extremely analogous today, in my mind, about on-chain versus off-chain Bitcoin. Like, people very likely in the future, if this history comes to pass, they're not going to feel the need to make small payments with on-chain Bitcoin. They're just going to use a layered system that's faster, maybe a bit more risk. Peter Todd said it great. He said it's a middle ground. You can find the tweet. He said it's a middle ground. It's not quite an IOU, but we should also admit Lightning Network is different. It's a Lightning Network. I'm not saying it's a different coin. Obviously, we know it's not. But Lightning Network settlement is different than Bitcoin on-chain settlement. And that's fine.
Yeah.
And it's great.
This is going to be an analogy that is anathema to a lot of Bitcoiners out there, but I don't know if you saw the extension that came out of the Chain Code Labs Lightning residency that's been blowing up recently. It's called Lightning Joule. It's a web extension that allows you to pay quickly, pay Lightning invoices quickly within the browser without having to tab alt to another wallet.
Yeah, I've heard you guys talk about it. Actually, haven't used it. But
it seems very cool. It's obvious, and it is very cool actually. But it is burdensome to the extent that a user has to run their own node. And basically, the natural thought experiment that comes out of an extension like this that forces users to run their own node is like, well, if we're going to create a good UX to onboard billions of people, the likelihood of everybody running a node is unlikely, so we might have to do some cloud node hosting, which is very, very taboo in the Bitcoin world.
Right.
Like, you should never trust a third party. But the developer of Joule, Will O'Byrne, shout out Will, he brought up the fact that, hey, I'm comfortable with having $50 to $100 in my Venmo account at any given time. I'm not going to put every paycheck into Venmo, a trusted third party that's trusting another third party that I'm keeping my money with. But Lightning Network, there's these trade-offs where, hey, I'm comfortable with $100 on Lightning Network, where I'll keep most of my savings at the protocol level in a wallet that's secured by a private key. But in the Lightning Network, I may be a bit riskier, where I say, hey, the trade-offs are such that I am willing to eat the security trade-offs for the quick transactions and that are basically free. So as we see this getting built out, I think these trade-offs are even going to get extracted a little more. It's like, all right, who's okay with sacrificing security for a couple $100 on the Lightning Network? Like, maybe that's the way the Lightning Network is used in the future, where you just top it off every once in a while, maybe once a month or something like that. And that is an instance where, all right, the trade-off's okay.
Yep. And there's a ton of possibilities. It's very hard to predict. There are these roadmaps, these plans, this free competition, which is amazing. It's fantastic. I think it's only going to be from a free market standpoint, like, it's the best shot anybody's had to develop this sort of thing. And if you're not into what we're saying, or you think that everything should be done on chain, or you disagree with the statement that we can't have everything in the world put on a blockchain, then there's those experiments too. And by the way, I'm totally fine with that. I mean, it doesn't bother me like that Bitcoin Cash, Bcash people go off and do those things. I think it's good for Bitcoin to see. Yeah, it's an incredible experiment that we're seeing, and obviously that's nothing new to be saying those things. But I will admit, I don't like I mean, I'm not a technical person anyway. We definitely prefer to talk about like economic stuff with Bitcoin, but this Lightning Network specifically is going to be a very interesting experiment of, again, I say like quasi IOUs, quasi claims. I don't mean that in a bad way. I just mean there are some trade-offs. It's clear. You should know that if you have Bitcoin in a Lightning channel, it's not the same. It's just not the same as on-chain Bitcoin. It's totally fine. I think it's better than any other IOU system that's ever been developed. Middle ground is a nice way to describe it. And we're just gonna see, like you said, there's gonna be different plugins and different ways to do it. And I think that's all for the good. But it's very interesting. Like, I guess the point that I'd try to get across to your listeners is it's very interesting to see Bitcoin develop in a way that, to me, seems completely analogous to how monetary history has always unfolded. And it's with some trade-offs. It's with some natural free market competition, normally winning, normally succeeding. And then, unfortunately, you see that things can get centralized. The government can take it over. The government can tell you they can give you a bit more protection. They can give you FDIC insurance. They can give you legal tender laws. They can protect you to make things exactly the way you need to be, when in reality, again, all of those things are born from fiscal problems of the government itself, trying to take care of itself. So the great hope for me is that we can keep the government out of Bitcoin forever. And I think that it's the best shot we've ever had with any money. I mean, we're moving into the digital age. Why would you not want a digital money that's a global protocol, that's defendable, that's uncensorable? I mean, what is the phrase that Trace Mayer, I think, is calling it the apex predator? Was that his phrase? It might have been someone else.
I don't know if it's Trace, but it's the apex predator.
Apex predator is great, but I'm not trying to coin anything here. But what Bitcoin does, it's like it is ultimate settlement media, but it's actually like the ultimate balanced budget as well, because Bitcoin
balances budget every 10 minutes.
If you want to try to contribute in Bitcoin, great, go for it. Try to mine, try to develop, try to do whatever you want. But if you're not able to do that, if you're going to be outcompeted, there will be other market participants that are going to fill that void. And at the end of the day, the budget is still balanced, which is an amazing thing. I mean, there is no, again, private money always succeeded in the past, and it was always monopolized by a government trying to balance its budget. That's the only reason governments monopolize money. They were trying to balance their budgets. Bitcoin, it is a balanced budget. Like you can't stop it. It's a honey badger, all those things. That is a really powerful thing. Like Bitcoin is a balanced budget. That's basically that's one of the ways that I look at it.
Well, that's a beautiful way to put it. And what I also want to dive into here is this is where we get a little heady in the podcast when the buzz starts kicking in. Is like, how incredible is it that the plebs now have control of the monetary policy, whereas everything has been decreed for at least the last 100 years almost, or 105 years now, decreed from, in the U.S. in particular, from the central bank. Now the plebs get to, the plebs is probably not the right term, but
could be the right word.
Yeah, the plebs. We get to experiment with this. It's open source technology. We get to have our input. We get to vote on it if we run nodes. The function of monetary policy has been handed over to the people with Bitcoin. And I think that is something that I mean, people have not grasped yet, where you truly have a say in the world today. Like you said earlier, money is 1/2 of every transaction in the world. That is a very important app. And before January 3rd, 2009, like nobody had a say in how something that affects half their life worked. And now the floodgates have been open, and you can shitpost about it all you want.
And let's maybe review how people are going to learn about this technology, because still, as we know, it's very nascent, and not a lot of people understand the open source power. But I mean, if you're going to go to a mainstream media outlet, and mainstream, I mean, like let's focus on U.S., like your local news, your or your national news, your CNN, your local 12 or whatever your local channel is. From local to national, your mainstream media, any commentary on what you just said would just be rambling incertitude from that side. I mean, these people have no idea what they're talking about. They maybe could make some bumbling phrase about the price, but you're not going to get anything there. So mainstream media obviously is out and clueless. Like if you want to learn about it, you just can't. You have to use other sources.
Sign up for Marty's Bet.
There you go. And the business news is interesting, because business news, like I watch business news. I like Bloomberg. I used to watch CNBC more. But these people, they understand profit and loss. They understand supply and demand. Sometimes they stop there and they just sort of comment again back to price movements. Even there, I mean, after all these years, like if you've noticed, if you've watched the last Bitcoin boom and bust, right, from 2013 to 2014, it is identical but louder than 4 years ago. Identical. People were loving...
The same people.
Yeah, they were loving this thing sort of failing. The price was falling. Because all they understand is like price and volatility. They don't understand anything about open source
node governance or
I mean, how to run a node, they don't understand anything, how a network would be upgraded. They don't understand anything there. So surprisingly, even with business news where you would expect a bit more nuanced, educated opinion, it's like the same vomit. I mean, they're literally vomiting on screen. Like they're reading the teleprompter.
Well, my favorite vomit is when they say hodls hold on to dear life. It's like, if you're going to say that, you have no idea of
no understanding of what it actually, where it was born and
what the ethos behind that being born
exactly
means.
Exactly.
It's not hold on for dear life. It's like, hey, I'm not a trader. That's what HODL means.
Yeah. And it wasn't born at all from hold on for dear life. Yeah. I mean, that wasn't like the genesis of the phrase, but the way they're just Philistines, these people, they're Philistines. They don't have any culture towards what is happening there. They can regurgitate a few things about volatility and price. I mean, just the phrases, like, it's so easy to read between the lines of someone who doesn't understand anything about that technology.
And the latest one has been the mining death spiral. People don't get the difficulty adjustment.
Yeah. Well, it's so funny to see it makes its way onto the teleprompter. A journalist, a news anchor, has no idea what mining or hash rate in Bitcoin even means at all. Tries to intelligently ask a guest who knows more. Just vomiting. They're vomiting whatever the teleprompter says. They cannot put two sentences together regarding this concept. It's absolutely incredible. So, point being, mainstream media, no. Business media, maybe 1 out of 100. Even
we had Joe Weisenthal on. I think he's a pretty good skeptic.
He would be in my 1 or 2 out of 100 that knows what he's talking about. And I like that he's a skeptic. And Matt Miller is from Bloomberg. He likes it. No doubt. There are, like, let's give credit where credit is due, but there are a lot of other people from his network who...
The @Crypto publication's terrible.
...are incredibly cynical. And again, they cannot put two sentences together regarding a technological or economic benefit of Bitcoin. They're just regurgitating something that's usually about price and volatility. There's just nothing there.
What do you think that says about the long-term potential of mass adoption? You think that's a hurdle we have to overcome? Do you think Bitcoin is sort of it doesn't care about whether or not you understand what it is, or do you think there is sort of an intellectual hurdle that we need to get a lot of people over before Bitcoin becomes successful?
Both, all three, what you said. Yeah, I mean, hurdle. That definitely, like, I think, as Murad says, like, I like his view, like, long-term. He's obviously very long-term bullish, short-term, a little bit bearish. And these are markets. There's going to be ups and downs. There's going to be euphoria. There's going to be things that are outside of the trend. And that people should be prepared for that. If I would put my investment hat on, which I usually only do for myself, or like, a little bit with my consulting work, but that's mostly still strictly calculations. I try to not give investment advice. In fact, I hate saying this is not investment advice. I think that's the worst, cheesiest thing. Because in Bitcoin, again, Bitcoin is a system where caveat emptor is like key. That is king. Like it absolutely, you can't complain to anyone if something goes wrong in Bitcoin, and when things go right, it's just caveat emptor. Like you can't. There's no third party you can blame or praise.
It's all personal responsibility. Like
exactly,
this is a personal decision. Like,
but if I had to put my investment hat on, one thing I would generally say, even without Bitcoin at all, like if we would just had like two assets, like fiat cash, and we had gold, I would say let cash be like your courage. Like if you're going to try to make an outsized bet or take advantage of some market movement, the only way you're gonna be able to do that is with cash. This is, as Rothbard said, like if there was no uncertainty in the economy, there would be no reason for cash. Flip that on its head and say, use cash with courage. Like hold cash. The only way you'll be able to take advantage of downswings in the market, drawdowns in the market, is if you have cash. I have so let's just say a less volatile, less adopting, less emerging market than Bitcoin. I think cash as bullion, like gold, or cash as fiat. Obviously, one of those is taxed, one of those is not, so you have to think about all those things. But having like cash in your portfolio will give you courage. And that's like just a very small point from an investment standpoint. But with Bitcoin, a lot of people don't see this. Like you said, this adoption is going to take time, or at least I think it's going to take time. There are so many people that don't look at Bitcoin from that lens of having courage. Like every every Bitcoin that I buy, every little piece of a Bitcoin that I buy, it gives me courage. I have more courage. Like, let cash give you courage. Yes, it would have been great to have a bit more courage with fiat than Bitcoin in December of 2017, than December of 2018. But that's those are just swings and so on and so forth. Like, at the end of the day, the way that I look at Bitcoin is with courage. Like, if I were holding bullion, if I were holding cash, if I were holding Bitcoin, the way that Bitcoin is and its life cycle of being adopted, it's clear it's a unique opportunity. I think, doesn't Pierre say it's like a once in a humanity opportunity? Not just once in a lifetime, it's a once in a humanity opportunity. Like, this is digital. We're moving, as Fernando says as well, like, this is money for the digital age. So cash should give you courage. Let, like, any Philistine on television that's just trying to discourage you from holding cash is doing you a disservice. If you don't have it, if you don't have courage buying Bitcoin, then don't buy Bitcoin. Don't do it. Don't run a node. Don't try, the Lightning Network. Just hold dollars and go on. And there'll be plenty of people in the world that will do this. But obviously, the trend over time, the technological adoption, so on and so forth, to me and to you and to plenty of people that are in Bitcoin, cash gives me courage for the future. And it doesn't matter about, like, the next month, year, 2 years. It's more about long-term down the line. Think about your family, think about your friends. So I would say, cash is for the uncertainty in the economy, but let cash give you courage instead of just trying to think about the next, I don't know, S&P play or something else. Just let cash give you courage. And
this is a good segue into what we want to get into, which is the post-Soviet Eastern Europe. In a book, I'm not sure if you've read this, but a book that is gospel to a lot of Bitcoiners, especially the hyper-cypherpunks, is The Sovereign Individual. And they basically they predicted Bitcoin on page 25, and the preface to their prediction was the mid-90s currency crises that happened in Russia and Latin America. And it basically said, in the future, and like you were saying, like, cash gives you courage, I'm going to be a little provocative and take it a little further. Like, Bitcoin gives you certainty with a private key. Like, you are certain that you have a claim to that Bitcoin. Whether or not that Bitcoin is worth as many US dollars as when you bought it is another question, but you have certainty that you have access to that UTXO on the ledger with your private key. And that is something that the sovereign individual, and this is what I want to talk about, like what happened in Soviet Russia. We don't have to touch about in Latin America, but like in the mid 90s, and basically the disintegration of dissolution of the Soviet Union because of a currency crisis. Bitcoin is sort of a direct answer to that type of problem. So you're somebody who lives in Latvia. Sort of, you probably moved there a decade after these currency crises had proliferated pretty terribly. What's it like? What do you notice from the psyche of the people living there? Do they talk about money a lot? Is it something that's on the top of their priority list as something that should be secured as I don't want to say they've already rebuilt their societies, but as they arbiter their societies into the future, is this something that's very high on their priority list? Is money being secure and sound?
Yeah, I mean, lots to say there. Again, with trying to not do too many tangents. My friend Jovanis Šalenis, he's in Lithuania. He runs the Lithuanian Free Market Institute. It's a very interesting organization. They started up like right after the Soviet Union. Mm-hmm. He says the one thing that any socialist, left-leaning, social democrat, I don't want to even make it sound like I'm against one or the other, that's leans towards socialism, but like the one thing that any communist socialist is sort of inoculized against in the Baltics is this deep red communism, which usually just results in death and destruction. And that's a good thing for that part of the world right now, but it's a bad thing for obviously parts of the Western world who have completely forgotten, how they got to where they were. It's a whole other discussion probably when you talk about the benefits of capitalism versus the problems that communism causes. But yeah, I would invite any listener who is in Europe on a trip, come to Eastern Europe. I'll buy you a beer. We can come to look at the infrastructure of Latvian countryside.
Feels like there's like a lot of Lutheran
state of the roads. Yeah, there's
a lot of Lutheran influence.
There's a big German. Riga was founded by Germans.
Okay.
In the 13th century, beginning basically the end of the 12th century. It has basically that part of the world has been dominated either by Germany or Russia or Sweden the entire time. So they're people that sort of know how to suffer. They've lived under oppressive regimes their entire existence, really. And
why is that? Is that trade routes? Are they in the middle of trade routes or something?
Yeah, trade routes. It's beautiful northern Europe on the Baltic Sea. It's really nice. It's land that was coveted, and they just, I don't know, I guess they had more tribal people. They were more dispersed than centralized empires. I don't think I'm insinuating anything about how centralized versus decentralized networks work. But I mean, it's a complicated subject, but I do think that if you were able to show, say, a Western American who was like liberal is a word that's funny. Like living in Europe for so long, liberal means like libertarian. It means like classically liberal. It means like you're more open to change. Liberal in the U.S. is like, they would describe that as a social democrat.
Yeah, socialist tends.
Yeah, so
tendencies.
social democrat is a good word. Any social democrat that sort of believes in their system, I mean, just come to the utopia of them all, which was former Soviet Union, and see the state of their infrastructure, see how much they have been, behind you for 50 years. And now they're recovering. Now they're doing well. Now they're doing better. So that's just like a small invitation. Definitely, please come. I'll buy you a beer and we can talk about it. There's no silver bullet to any of this, but the lesson is very clear to me, and I think to most Eastern Europeans, especially migrant families that have gone to the U.S. or the U.K. or Australia, and there are many. That have basically, been sending letters back home during the Soviet Union, seeing updates about how tough life has been, and it continues again and again. I mean, we have it in Venezuela. Zimbabwe now has more inflation. Inflation is an animal that it will rear its ugly head at any time. It's impossible to predict. No one knows when. This whole study about the monetary base we've done, which I don't want to maybe get back on that tangent, but like. There's been a lot of monetary base inflation in the world in the last 10 years, but we haven't seen like crazy inflation.
Well, let's jump into that. Well, we haven't seen crazy inflation in terms of price inflation for the CPI basket that the Fed would have you believe is the most important metric from which to measure inflation. But I would say, like, look at asset prices, the S&P, whether it be equities, real estate, college tuition.
Yeah.
Car prices, or actually not car prices in particular, but I will say healthcare, college tuition, housing, 3 cornerstones of society here in America, I would argue, have hyperinflated over the last 10 years.
Yeah, and I think over the long term, that's always true. Like you can't maybe predict it over the long term, or over the short term, but you can see it over the long term. Absolutely true. Like it's higher than other prices in general year on year. John Williams, nice, solid, old-school economist. He makes this point a lot in his newsletters. Like, the way that they've defined inflation has been changing since the 80s.
Yeah.
Since the 80s.
And
so the
bullshit.
hedonics, basically the variables that they put into the index, they've changed. This is a common thing. I think most Austrians or libertarians or classical liberals know. Like if it used to be steak, now it's beef. And
it's rough rice now. It's not even beef.
Right. Obviously, that's the trend, is that they keep diluting the index. But all these things are still, again, I sort of go back to what I said. If you were a gold bug in 1979, you got to be careful. I'm very careful to predict, like, there is a point. There will come a point. There is this time. I do not know.
Let's talk about recent history, though. Let's talk about central banks buying national treasury bonds and equities. So Japan in particular. How long can Japan go?
Well, it's been since 1990.
Right, but it is coming to a head.
Is it?
Yeah, they're trying to unwind their bond buying program.
I mean, they could say they're trying to unwind, but obviously the moment that...
Well, all right. For you freaks, we're getting into like a very, like, we know what we're talking about right now. For you freaks that are trying to understand what we're jumping into, so a big trend has been recently, Japan started the trend. Japan has terrible demographics and was a very stagnant economy, a very... what's the word I'm looking for?
Stagnant.
Not stagnant, but it's been automated. It's been automated by technology in particular, which has driven down wages and really fucked with Japan's economy. And in Japan, the Bank of Japan has responded to that by printing money, and they were the first to start a QE program in the 90s, and it has persisted for 25, almost 30 years now, which is crazy to think. But now they're venturing into buying Japanese government bonds and equities. They own 40% of the ETF.
Well, I think that's the key point is the equities. Right? And this was my point, is that even though you have to sort of watch what they do, not what they say. And again, short term, it's impossible to predict. Inflation in general is impossible, and I mean price inflation. It's impossible to predict when an economy would go into hyperinflation. So if anyone tells you that they know, they don't. Yeah. There are a myriad of factors. It could be social unrest. It could be a political crisis. Brexit could have caused hyperinflation. You never know.
Turkey is the perfect example. They didn't print any money, but they had a hyperinflationary.
Yeah. They were printing, but it wasn't like...
Nothing like Zimbabwe or Venezuela.
It wasn't Zimbabwe numbers of monetary base inflation, yes. But I would say to that, again, to be cautious, there is the only limit of what central banks can do to, quote, keep the system in check is how many assets there are in the world. Japan could buy everything.
Fuck, man.
They could buy the S&P. They can buy, they're already buying, NASDAQ, as you said. They're buying a lot of these ETFs and things. But Swiss Bank owns FANG stocks. There is no limit. So the Fed, in that sense, is actually mild. The only thing that the Fed owns that's not conventional is mortgage-backed securities, which they did after the 2008 crisis. They mostly just own treasuries, U.S. Treasury, which is typical, and they own mortgage-backed securities. But there is no limit to what a central bank can do. There's no limit to that monopoly power. The key, really at the end of the day, all I can say is that the key is that a sound money, a stable money, doesn't have that outsized influence, which is licensed or protected from the government. And thus is Bitcoin, So I think that gives me great hope, and I have great, as I said, great courage in holding Bitcoin, which I think you, me, your listeners, a lot of people, we are definitely on a tail end of society at this point because most people don't have that courage. Think, why is it needed? It's a Ponzi scheme. It's a scam. We have Amex. We have Visa. What's the point of it all? This could take decades. I mean, this could take...
I've conceded that this could happen well. Hyper-Bitcoinization, quote unquote. I don't think that'll happen very quickly, if at all. But I've very heavily conceded that could happen past my lifetime. Yeah, at some point past my lifetime. But staying in this vein of conversation, what the hell? What were we just talking
regarding central banking and their asset purchases?
Yes, but
hyperinflation and
I just had it. What was it? Bitcoin. Give me a second. You're talking about Bank of Japan buying all those assets. Fuck.
Is there an end to it? Is there going to be how they're going to exit? Maybe how would they exit, or how?
Well, how do you think they'd exit? No. Shit. I had a very good follow-up question to that. So the train of thought I was getting, you're talking about Japan, and would you agree that their money printing has enabled them to buy these type of assets?
I mean, that's the definition of it.
Yeah.
When they on the balance sheet, when they print money, it's actually their liability to society. It's a liability on their balance sheet, but they match it with an asset that they bought that printed money for. So typically it's government bonds. That's the typical thing. And that's historic. I mean, that goes back to governments always monopolizing money. It matches their sort of credit. But there is no limit to the assets they can buy. So Japan has sort of paved the way there, buying stocks, and Switzerland has followed suit. And there are others. I mean, Zimbabwe just bought everything in their country, so to speak, and then it was gone.
So
But,
another way of saying that is there's no limit to the amount of money they can
there
print.
is no limit to the monetary inflation that is an increase in the stock of the monetary base, which we were talking about at the beginning. There's no limit to that. They have full monopoly. But I would quickly counter. Again, I am not trying to sound like a doom and gloomer or sound that that's even a system that can't work. It does work to an extent. And
It works, but it also... All right, so yeah, this is the segue that I forgot for like 5 minutes and finally remembered. The segue is into the ethics of money production.
Great book.
Guido Jürgen Holzman wrote The Ethics of Money Production in 2007, the year before Bitcoin came out. And I know it vividly, from pages 70 to 72, I
Good
believe.
for you, man.
There's like 4 paragraphs in which he describes the opportunity costs that arise when you print money from a central authority. They basically enable investments in, like, I mean, I think the VC boom here in America is a perfect example of it. They enable investments of sort of wasteful endeavors.
They make
whereas
other things seem feasible, which they normally
exactly,
would not
and you
seem
have
other investable opportunities.
On these 3 pages, he incites a biblical story of the builders in the time of Jesus who had easy access to money would try to build temples, but they'd only get like a tenth of the way, and you'd have 30 temples built like 20%. Which is sort of the same system that we find ourselves in today, where the easy printing of money has enabled unwise investments, whereas if we were on a more sound money, the investments that would be made with more critical thought, and there's a bigger opportunity cost, which I would believe Holzman would argue drives smarter decisions.
Yeah, so I would. My initial answer might be not what you would expect, but I would quickly counter and defend systems that were free, again, to using fiduciary media, which means bank-created money, IOUs, to facilitate a better functioning society than one that did not have those things, one that just functioned on a purely narrow banking, 100% reserve, gold standard system. Adam Smith wrote about this. Many people wrote about that, from Adam Smith to Selgin, so on and so forth. It's important to keep in mind, and this is where I think Fernando is with me as well. I think he studied under Hernando de Soto, or Jesus Huerta de Soto, who was a big 100% reserver, big Rothbard. And these guys are like, again, I'm not an economist. I'm not trying to sound like I can go
What does
it
take to be an economist, though? That's a good question.
It's a good question, but I'm definitely not one. All I can tell you is that, Marty, definitely not one. But again, it comes back to that phrase, like you said, there comes a point. Here's what an economist is. Economist should be someone who, Mises said this, Hayek said this, who explains to you clearly the situation and then stops. It's purely descriptive and not prescriptive.
Yes.
This is very, very important. I mean, this is, again, like, how many economists have you seen on TV who give this sort of, highfalutin, they know the solution to all your problems.
The UBS's head economist went on CNBC did you see that?
And I didn't see that one, and then when they get a bit edgy, themselves, and we could name names, we could not name names, but my question to you is, how many of these people were locked in the janitor's closet when they were younger? I mean, these people have no skin in the game, to quote Taleb. They have no skin in the game. So an economist, if you want to take an economist's word at the correct level, the correct value, it should only be as a descriptive, explanatory reason. The moment that he prescribes, the moment he says, I know better than you, I think he probably was thrown in the janitor's closet. I really do. Because these people are taking an asymmetric view on their own productive capacity in society. I'm much rather going to listen to an entrepreneur, to someone who has skin in the game, someone who, a CEO, a miner, someone who is doing work, regardless of the field, whatever you're talking about, than an economist. And that's like, it's so I know it sounds trivial or whatever, and
It's not, though. That's the plight of our modern age, is the hubris of some economists who think they can micromanage a global economy. That's why I think we're in the situation that we are, because we have an elite class of academics that think they know how to pull the levers in such a way that can make the world perfect.
Yeah, and quickly, again, I want to try to cover the bases. Like, you may think that I'm not with the Austrians, or if I'm making some critiques of some of these guys that are 100% reservers. I'm very sympathetic to a lot of their views as well. But, there are definitely some points of disagreement there, but mostly academic. And I want to try to close the bow on this 100% reserve stuff just quickly. But, like we had Bob Murphy on our show. We had George Selgin on our show. They did a Soho forum, which we're about to go to, a debate on fractional reserve banking. This is a very narrow academic It's a very focused debate that is interesting as hell. Like, I really like it. But at the end of the day, I don't think it means much towards the way actors in the market will act. Mm-hmm. But what I think they both agree on was the most important point. And I tried to, I like Bob Murphy a lot, even though I maybe sympathize with Selgin's writings a bit more, at least regarding the history, not on some of his prescriptive stuff, because Selgin toes a line too. I mean, he's an economist. He works, he prescribes things too. But point being, both of those economists, they agree that the solution to their disagreement would be the free market taking action. It would not be government intervention. Mm-hmm. Murphy thinks that reserves would be higher. He actually, interestingly, doesn't say 100%, but he says it would be higher than what Selgin thinks. This is what he said on our show. And I think that's what it gets down to, is like those guys, those economists, and Huerta de Soto, all of these free market economists, they all agree that if you remove the monopoly from society, then you're going to get to something that is more reflective of how people act. Mm-hmm. And that's I think where it goes there. So I just wanted to sort of make that point in case your listeners thought I was not sympathetic to these Austrians. I definitely am. But back to your question about Holzman, where were we there? You lost your train of thought now. I did. But with Holzman and...
No, so let's get into the ethics of money. Like, is there an ethical line? Like we were talking about Japan printing money and pushing it into equities and ETFs. So there's signage there where they're printing the money and they get first access to that money and are in turn allowed to turn around and loan it out at a higher interest rate for nothing, basically. Is there a line at which, I don't want to say society recognize, where does the ethics of money production come in? And is there a way we can frame Bitcoin in a way that makes it obvious, hey, this is obviously a more ethical system?
I don't think there's any starting point. I don't think there's any ending point. Again, if you say line, if you say comes to a point, I think you're always going to be surprised. Mm-hmm. And I think that there is no limit to the amount of shenanigans, the amount of assets that any central bank can purchase with their printed money. And I don't say that in a flippant way or a way that's not even possible. I mean, this has been done.
This is just fact. This has
been done.
You're being descriptive.
Time and time again. That's all I'm trying to do is describe. Maybe I'm more economist than I'd like to be. I really am just trying to describe. But Steve Hanke does a great exhibit on inflation. I don't know if you've seen his exhibits.
Great Twitter follower.
Yeah, with Cato. He's not such a fan of Bitcoin, actually.
Oh, I know he's not. But he's still...
But he is a fan of sound money, at least in his view. And he makes the point, and he also he calculates inflation based on purchasing power parity of all of these countries. And if you actually read some of the work that he's done and you digest what he's saying, it really hits home to me, at least, is this is the challenge of any individual actor working in alongside a massive monopoly is you never know when it might go wrong. You just never know. It could be tomorrow. It could be 5 years from now. Again, imagine if you were a gold bug in 1979, gold hit 1 year later, gold hit 800 for about 5 seconds, and then it never recovered until the year 2000. I don't think that at all is analogous to Bitcoin as far as price action, but they can go on a lot longer than you think that they can, and their only limit is assets in the world. They can buy every single asset in the world, technically.
I'd say there's two limits. That limit of how much they could buy, and then the human capacity to be duped for so long. I think it's more of a social thing than a mathematic or like you said, you shouldn't draw lines or like point to like, hey, this is.
Yeah.
It's going to be like a psychological thing where there's sort of like an avalanche effect where snow slowly falls for 3 or 4 years, and then there's one point where it's like, all right, everybody just collectively loses confidence, and you have an avalanche.
And it's unpredictable. I mean, Weimar Republic, Venezuela, Zimbabwe, all different cases, all different post-Soviet, basically every post-Soviet republic. Massive suffering, massive suicides, massive social unrest. It's completely unpredictable. It's not moral in any sense of the word, and you just have to take responsibility and be careful.
We have to get going soon. I completely agree, and that train of thought just like leads me to ask this question: like, do we truly live in a capitalist society in America today? I know you don't live here right now, but like in America, is America truly capitalist, or do you think it's a socialism of the rich to a certain extent?
I mean, I don't look at myself as someone to make those judgments. I think, as is everything, there's a gradient. Like some people are very happy to pay taxes in the U.S. Some people aren't happy to pay taxes. Some people are very happy to evade taxes in Russia. Some people are happy to pay, Putin his little his Peter's pence or whatever the word is to give to Putin. But I mean,
alms to Putin.
His alms, their little dues. I mean, it's all individual. The market is a collection of unlimited demands, desires, wants, and needs, and a limited supply. People are going to try to take advantage of it. The main key, I've said it, I think again and again, but it's for me, it's where the buck stops, is that when you have a monopoly granted from government, you should usually be most cautious in how you act around that monopoly. And Bitcoin gives us the best chance we've ever had to like be an escape hatch, to give you courage, to protect your family, so on and so forth. We're about to go see Larry White, which we've talked about a little bit during the show. I don't know if you want to go into his new hip project.
Well, that's what. All right. So before we go into it, so I was listening to your interview with Larry White earlier today, rehashing it. I listened to it twice today because I agree with a lot of what he said, and I was actually disappointed after listening to it to find out that he's latched his reputation on Initiative Q. So for you freaks that don't know, Initiative Q is a quasi altcoin. I don't even know if you can call it an altcoin because I don't think you can mine it right now.
I think they've marketed themselves as not a cryptocurrency.
Yeah. They're marketing themselves as sort of this global currency where if enough people sign up, there will be enough liquidity. They're actually creating FOMO, where they're saying, hey, if you get in early enough, enough people join, like it will be worth a lot of money in the future. Yeah. Which and to highlight something in your interview with Dr. Lawrence White in particular that he said is like once you have a corporation doing signage, like that is not what you want. And it seems like he has completely sold his soul to Initiative Q in particular, which does exactly what he was telling people not to do when you had him on your podcast. Yeah.
So just a couple points here. I mean, I know we're running long, but Larry, so I don't know Larry personally. I mean, we've interviewed him. We've interviewed his student, Dr. Seljan, who if you've been making it this far in the show, obviously, I have a tremendous amount of respect. I like reading what both of them have written, massive volumes on just great banking, freedom of choice in markets and economy and everything. They're very, very open to freedom and the opposing that monopoly that we've been talking about. Larry, if I was going to speculate, and I guess I should comment on this since I've been quoting them as people that I look up to. Like he's definitely an OG in the space. Like his I think his Twitter feed is like studying private currencies before they were cool. I mean, the most obscure thing, like if I even mentioned small change on this podcast, I mean, he would be able to tell you like just example after example after example of small token fiduciary change that worked better in the free market than some royal minted public silver 100% content quality silver coin, he'd be able to tell you that actually a private token fiduciary coin functioned better in this market, so on and so forth. I'm just trying to give you a flavor of this guy's definitely like an OG in the space, and they know what they're talking about as far as historical banking and economics go. I can only assume that so it came out after we interviewed him. I can only assume that he looks at this as an opportunity. He's later in life of taking part in something that's interesting, but the way that they have marketed, and I understand he's like a consultant in the project, whatever that means, but he didn't like start it, or he's not the technical person behind it. They've marketed it themselves as being basically, imagine you got into Bitcoin like 8 years ago. That's one thing. They also say they're not a cryptocurrency, and they also say, like you need to accept one email and then send 5 emails to your friends.
Yeah.
It's very, I'm sure he has his own network effect reasons why he would think that could be something interesting, but I have no explanation of why he would support a project like that and not maybe write more or talk more about Bitcoin or even a stable coin.
Right?
Or something.
I mean, because at the end of the day, like what is accruing value out of that system? Like, especially if it's not proof of work, where you literally have to expend capital to prove that you did the work to add transactions to the Bitcoin ledger, and because of that, you're rewarded with Bitcoin. With Initiative Q, it's like it might not even be a blockchain. It's like, how can you bootstrap that value? It can't just be sort of credentials of people that are respected, quote unquote, in certain arenas.
I've given it next to no time to even research myself, but I can say that the fact that they've marketed it as being, imagine you in the early years of Bitcoin, and at the simultaneously same time saying we're not a cryptocurrency, it's very confusing to me. And on top of that, like he certainly knows the history of e-gold and Liberty dollar, Liberty Reserve. Yeah. Like he knows that history. So I don't have an explanation, but we're about to go see him debate Ken Rogoff on the benefits and the merits of free cash in society.
Yeah, and Ken Rogoff is some status freak who wants NERP policy to go mainstream.
And I mean, all of the moral, philosophical, free market reasons why cash is good, Larry will be defending tonight. So I'm very interested to see what he will say about that.
And that's one thing you freaks should know is, like, I could disagree with Larry on Initiative Q, but I do broadly, with a broad stroke, agree with his philosophy behind free banking and the way there should be an open competition for monies on the market. And again, everybody in Bitcoin, whether it be from a cryptography standpoint or an economic standpoint, stands on the shoulder of giants. And without guys like Larry or George Selgin sort of paving the way for us to even grow on these ideas, we would not be here. Even though he might be misguided with Initiative Q, I am very much thankful for the groundwork that he's laid.
Agreed.
All right. We've got some commercials to record too before we go. We're only 20 minutes away from the event, so we're not too late. But we should wrap up here. We're coming up on 2 hours. We ripped 2 hours.
So are we done with the actual content for the show?
No, not yet. Do you have a final note for any of the freaks out there, for anybody who's just listening to this?
Well, yeah, I would just, maybe it was because the vodka was not flowing smoothly enough at the beginning for me. I still, I understand that the differences in money supplies are a confusing thing, and the difference between what a claim is and actual basic money is a confusing thing, and the role that credit plays in all of that is a confusing thing. I hope that some of that, at least my view on that, is beneficial to your listeners, and if they like what they're hearing and they haven't heard our show, definitely can listen to that. We explore those issues. But there's I wish I could give a simpler answer for some of this. Money is definitely a complicated thing. Credit is probably outstripped money as far as like it's older than money. Mm-hmm. But money is a medium of exchange that exists when societies get developed enough. That's the point. They're developed enough.
This is something I want to talk about with you.
Okay, go ahead.
All right, so the whole debate is like money to become money has to go through this continuum: collectible, store of value, medium of exchange, unit of account. And I've been talking about this with Pierre Rochard in particular more recently. Is that it is all encompassing in Bitcoin now? It's just not perfect for each use case. It's perfect as a speculative asset, but you can use it as a medium of exchange. But the opportunity cost of using it as a unit of a medium of exchange right now is pretty high.
Yep.
So I guess the argument is, does it have to go through this continuum? Is it in a very strict silo where it's like, hey, it's a medium of exchange here, it's a store of value here, it's a unit of account here, or can it be all encompassing while sort of attaining liquidity over time?
So my general answer is I don't know. That's why I like to ask questions and do this show. But so answering myself is more challenging. But no, Fernando wrote, I think, store of value, then medium of exchange, then finally unit of account. The more interesting thing is medium of exchange. Like that's when you know it's a money. But I think the more interesting thing on top of that, Marty, is that no one alive today has ever witnessed a money truly becoming adopted. So no one really knows. A lot of people also have this thing about the credit theory of money, which is a whole nother thing. Graeber as well, yeah. But I mean, that if you read Sidney Homer's History of Interest Rates, he makes this clear as well. Like credit is, I use the example as well. We talked about this with George Selden on our show. Like credit is ubiquitous everywhere. Like it happened in ancient times. It happens now. Credit is different than money. So like two cavemen, I'll make the fire today, you make the fire tomorrow. These are credit transactions. This can happen all the way from then to now. Like you and your sister, like I'll do the dishes today, you do the dishes tomorrow. That's credit.
Could credit be abstracted could credit be abstracted to a point where it's analogous with risk? Like that's basically what it is at the end of the day. You need risk for society to succeed.
I think that is the definition. But it's not necessarily saying that. I don't know how to close the loop on risk, because that probably brings up other finance things in my head that I don't want to get into it on the end of your show. But as far as a exchange mechanism, very simply, let's say, it's absolutely true. Like Graeber is right, and I agree with him there, that credit, and Sidney Homer writes this, many people write this, credit was the first thing. It's clear that we needed, like, an easy way to exchange would be through credit. Sidney Homer writes, like, it needs no barter, it needs no trade, it needs no commodity, it needs no metal. Credit is ubiquitous throughout society. It comes like from us. There's another good book, Who Needs the Fed, I think it is. It's John Tamny. He's an Austrian, but he's sort of like me. Like he's more on the not worrying about fractional reserve side. And he writes the same things. I mean, credit, like we can demonstrate this right now. Like I have one Bitcoin, I loan it to you. You have that Bitcoin, you loan it to someone else. They have that Bitcoin, they loan it to someone else. And then let's say that person loans that Bitcoin back to me. Did I just count 4 people there, 1 Bitcoin? That totally can happen. It's a normal, it can totally happen inside. The question is, should it happen? Should individuals enact in those, should they partake in those credit transactions? That's up to the market to decide. Was that a stupid choice? Was that a smart choice? Was there, how much risk was involved? You need it back, so on and so forth. So credit is totally ubiquitous in society. You can have 1 million credit transactions on the same Bitcoin. There's no problem with that. I have no issue. And again, I'm not prescribing. I'm just trying to describe. But money, when money, that's not money. Bottom line is that's not money. Money is something where you have a more developed society. You might not be in that place in the next few days. You may be trading in, South America, and you may be going back to Spain, and you're going to need something different to make an exchange, because a credit is just not going to cut it. Mm-hmm. So that's what money comes into. So money, Graeber is right. Money comes after credit. So he is right there, but he's absolutely, I think, I
think he's wrong in the fact where credit can create a sound. You can create a sound money.
Yeah, he basically makes the argument that credit is money, the credit theory of money, and I don't agree with that at all, because it's clear we need money in certain times and places. Money takes value into the future, and you can use money across societies that are more developed than, like a tribe. Mm-hmm. If you're just a tribe, then you're not going to be able to use some certain credit mechanisms that you could use normally in that tribe. But outside of that tribe, when you get more developed and an economy comes and you have more specialization, you have more businesses and more people, you need a medium of exchange to make it all work. And that's the crux of it. We asked, I was very, proud or happy that we got Seljan as our first guest, because I specifically asked
huge first guest. And
those questions.
Probably your best. I don't want to.
It probably was my best, our best interview.
Top 3 interviews.
I mean, yeah, we were asking all of the main questions that I still struggle with. I mean, I'm not saying I'm an expert in all of those, but medium of exchange, when you're talking about money, that is the cornerstone of a money. Mm-hmm. I don't even bother the argument of whether store value should come first, whatnot. I totally agree with, as Fernando writes, or as I think you are getting to, I'm totally fine with the argument that store value is first. Again, doesn't matter what I say anyway. Bitcoin Core nodes are going to do what they do, and that's great. And I think it's fantastic.
It doesn't have to be Bitcoin Core nodes. It could be LibBitcoin nodes.
It could be LibBitcoin nodes. Yeah, it could be. But that's an interesting question too, because Bitcoin Core nodes probably looked at Bitcoin XT and Classic nodes as an attack, whereas they might not look at LibBitcoin as an attack.
Yeah, because it's in consensus, right? This is a conversation for a whole other episode.
It is, but generally the consensus rules are the same. If those are, I guess, the main things, but they were not with XT and Classic. Mm-hmm. But in any event, that's a whole very fascinating topic as well. We slightly touched on that with Carter in our interview, but I think that's another thing to explore. I don't know the answer to that. If you can have a Ethereum style 2 main implementations, I do not know the answer.
I would argue no, but I do like that there are competing implementations, just in the sense that it gives you different perspectives on how to view Bitcoin. LibBitcoin, when we were in Riga talking to Eric Voskuil, was he was holding court with a circle of 6 of us,
and I was just giving him shit,
right? But it makes you think, they don't even have a UTXO set in LibBitcoin, which blows my mind. Yeah. It's I can't even view Bitcoin without UTXOs.
No, he's a solid thinker, and I enjoy him very much, listening to his points. But I enjoy I enjoy it all in Bitcoin. I mean, it's no one knows for sure. Hyperinflation is completely unpredictable. That's another point I want to make clear to your listeners. Hyperinflation is completely unpredictable. It can happen at any time, any place. You never know. Sound money is something that is proven slowly over time, and I don't know. Stop me at some point, Marty.
No, I think this is actually a great segue, because we gotta leave. We gotta leave. Before we leave, though, Matty is going to record some Bitcoin commercials that I'm going to tag on to the end of this. A lot of them being very pertinent to the subject that we're just talking about.
But I'm going to need 5 takes to make it sound good for each one, or we're going to have to do this live on the show.
Do you hear yourself talk? I don't think you can hear yourself talk. Your voice is immaculate. All you need to do is just read the sentence and it'll be fine.
I'm flattered. Thank you. Thank you. All right, let's do it.
Where can we find out more about you? Because I don't know where, other than your podcast.
Yeah. I guess by design again, but
I like that.
Again, I really appreciate you saying that. CryptoVoices.com. CryptoVoices.com is the site, and the podcast, same name. Crypto_voices on Twitter. Again, not trying to be someone that can pontificate on how it should be or prescribe something in Bitcoin. Just trying to describe it, trying to ask questions, and I'm intellectually curious about the stuff that we ask, mostly about monetary policy. Probably some ramblings in between, but hopefully you guys at least enjoyed a little bit of the cut. The jib that we're talking about. It's
the most underrated podcast in Bitcoin, I would say, by far. And
I'm fine with that description too.
And I thank you for making it. It has helped me out, especially when I get lost on long drives.
That's the best time to turn on the Crypto Voices podcast.
But seriously, I appreciate you taking some of your time on your short visit to New York to stop by here.
It's fantastic.
Thank you for the vodka. It's been a great time. We're going to record some commercials. Peace and love, freaks.
I hope we can do it again soon. Thanks, Marty.
We will.
Right, peace.
Don't forget, freaks, this episode of Tales from the Crypt was brought to you by BlockFi. BlockFi is the leading crypto to USD lender in the U.S. with services in over 45 states. They let crypto investors use their Bitcoin, Ether, or Litecoin for things like buying a house, paying off credit card debt, or even buying that Lambo you've been saving up for. Though I think Lambos are pretty cheesy, you should buy a cooler car. If it floats your boat and you want to use BlockFi to lever up with your Bitcoin holdings, you can go buy that Lambo or take out a mortgage on it, or a car loan on it. Visit blockfi.com/Tales from the Crypt to learn more about using your crypto without having to sell. And remember, there's a special deal for you freaks out there. Any loan under $10,000, they're going to throw $25 worth of crypto your way. Above $10,000, they're going to double that to $50 of crypto your way. BlockFi.com/Tales from the Crypt. Takes 2 minutes to sign up. Don't be shy. Check it out. See what's going on there. And I hope you freaks enjoy these Bitcoin commercials from our boy Matthew. Have a great week.
When there is no other option, there is Bitcoin. Bitcoin, the first asset that you truly own. Each Bitcoin is a share of tomorrow's financial system today. Bitcoin, just in case. Bitcoin, if you don't believe me or don't get it, I don't have time to try to convince you. Sorry. Do you trust the government not to line their pockets at your expense? Me neither. Buy Bitcoin. Bitcoins aren't for trading. They're for passing on to the next generation. Bitcoin, dying since 2008. Bitcoin, is it the bubble or the pin? Bitcoin and Bitcoin alone is sovereign. Stock prices have reached what looks like a permanently high plateau. Fisher, 1929. One myth that's out there is that what we're doing is printing money. We're not printing money. Bernanke, 2010. Is that a Swiss bank in your pocket? Or are you just happy to see me? If Bitcoin is rat poison, then banks are the rats. Biatch. Bitcoin. What's the worst that could happen? Nothing is more scarce than a Bitcoin. You don't change Bitcoin. Bitcoin changes you. Bitcoin is a tool for freeing humanity from oligarchs and tyrants, dressed up as a get-rich-quick scheme.